Hi, this is Thirumurugan. In this video, we are going to see about candlestick patterns and its types and how to use in the trading. So first we will see the definition of candlesticks in the trading. Candlestick in trading is a charting technique used to represent price movements of an asset such as stock, commodity or currency over a given period of time. So this is the candlestick. Green color one is bullish handle, red color one is bearish handle. You can see the body, the green color and red color, that is the body that indicates the open price in the down, then in the upside that is the close price. In the case of bearish, open price in the upper side, close price in the downside. Moreover, it will also indicate the high and low price also. So you can see bullish, high is in the upper and low is the down. The same thing, bearish, high is in the upper and low is in the down. So the edges, the line, we will call it as a shadow. There is upper shadow and lower shadow. Upper shadow always indicate the high price, lower shadow and always indicate the low price. So the chart displays each period as a candlestick, which includes 4 key pieces of information: the open price, closing price, high price and low price for the period. Period means one candle, maybe it may be a 1 minute candle or 5 minutes candle or 15 minutes candle. So each candle for the given period, it will indicate the 4 information such as open and closing price, high and low price. Different candlestick pattern can indicate bullish or bearish market conditions as well as potential reversals or continuations of trend. The shape, size and color of the candlesticks within the pattern can provide valuable information to the traders about potential market trends and reversals. Candlestick patterns are a key components of the technical analysis and they are used by traders to identify potential buy and sell signals. For example, a bullish reversal pattern such as hammer or bullish engulfing pattern can indicate that a downtrend may be coming to an end and that a bullish trend may be starting. In the image, you can able to see the top bullish hammer handle is formed. When the bullish hammer is formed, there will be a downtrend, it is going to be end, then there will be a initiation of upper trend. Then in this case of bullish engulfing, when the bullish engulfing is occur, then there will be a downtrend is ending, then there will be a initiation of uptrend. Similarly, a bearish reversal pattern such as shooting star or bearish engulfing, the same opposite pattern, can indicate that the uptrend may be coming to an end and bearish trend may be starting. You can see the image, the top image showing the bearish engulfing. In that left side, there will be a stop of bullish market and there will be a starting of bearish market due to the bearish engulfing. In the downside, the shooting star shows that there will be a end of bullish trend. In the middle, then there is a shooting star, then there will be a starting of bearish trend. While individual candlesticks can provide important information about the price movements, candlestick patterns are a more comprehensive tool that can provide traders with a broader perspective on the market trends and potential trading opportunities. By studying these candlestick patterns and their relationship to overall market trends, traders can make more informed trading decisions and improve their chances of success in the markets. Next, we will see some types of candlesticks and its patterns. First one is bullish or bearish engulfing. These patterns occur when a large candlestick completely engulfs the previous candlesticks, indicating a possible reversal in the current trend. Engulf means eating, that means swallowing, right? In the image, you can see bullish engulfing. Bullish, you can see the green color candle eating or swallowing the red color candle. In the case of bearish engulfing, you can see the red color candle eating the green color candle. Eating means it's entirely covering that one. So the size of the green color in the bullish and red color in the bearish is more than that of the previous candle. Second candlestick pattern is hammer or hanging man pattern. So this pattern indicates possible trend reversal. You can see the image, the downtrend is reversed to the uptrend due to the formation of hammer. It is encircled. You can see in the other image, right side, the uptrend is end with the formation of hammer. Hanging man. So then there will be a downtrend. It is also saying that buying signal as well as selling signal. So you can see the hammer, so the body is in the top, that is the green in color, that will use the buying signal. Then red color hanging man, the body is in red color, that will give the selling signal. So doji indicates indecision in the market and can signal a potential reversal. You can see the image showing there will be a indecision in the market. First there will be one doji, then another doji, then there will be green bullish the one, then there will be a trend reversal. The fourth one is shooting star or inverted hammer. You can see the both the thing in the image. It will shows the possible trend reversal. Next is morning star or evening star. These patterns occur over 3 days and indicate a potential trend reversal. The morning star consists of a long bearish candlestick followed by a small bullish candlestick and a long bullish candlestick. The evening star consists of a long bullish candlestick followed by a small bearish candlestick and a long bearish candlestick. Then 3 black crows and 3 white pulses. Like morning and evening star, these pattern also form over 3 days, indicates the potential trend reversal. You can see the image. 3 black crows consist of 3 long bearish candlesticks, while 3 white soldiers consist of 3 long bullish candlesticks. Next is Maruboju candlestick. A Maruboju is a candlestick with no wick or shadow, indicating that the price opened the low or high and closed at high or low of the trading period. You can see the image showing the Maruboju bullish and Maruboju bearish. A green Maruboju indicates the bullish trend. Black or red Maruboju indicates the bearish trend. Spinning top. A spinning top has a small real body and long wicks or shadows, indicating indecision in the market. The image shows the bullish spinning top and bearish spinning top. The next one is piercing line pattern. Occurs when a long bearish candlestick is followed by a long bullish candlestick that opens below the low of the previous candlestick and closes above the midpoint of the previous candlestick. You can see the image, the piercing candlestick, then how to trade, then there will be a trend change. Next one is dark cloud cover. Dark cloud cover pattern occurs when a long bullish candlestick is followed by a long bearish candlestick that opens above the high of the previous candlestick and closes below the midpoint of the previous candlestick. You can see the image, left side the dark cloud cover handle, then the how it is changing up the trend in the right side. Tweezer tops or tweezer bottoms. First, tweezer top pattern occur when 2 or more candlesticks have highs that are at or very close to the same level, indicating the resistance to the further upward movement. The image showing the both tweezer top and tweezer bottom, showing the bullish as well as bearish trend. And a tweezer bottom occurs when 2 or more candlesticks have lows that are at or very close to the same level, indicating the support at the level.